A lawsuit against Maker DAO has just been filed. Volume on cryptocurrency Link has exploded in recent days, and a survey of professional fund managers reveals a bearish bias. All this and your complete breaking Bitcoin market analysis in tonight's episode. Stay tuned.
This is Enzo from OKEX, and you're watching Breaking Bitcoin.
A technical difficulties, but welcome back to Breaking Bitcoin. We are live every evening at 9 p.m. Central Standard Time, your evening source for everything markets and finance. I'm your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys are doing absolutely fantastic. We've got a fantastic show for you. If you are looking to develop a verifiable systems approach to your trading strategy, join our community. Take advantage of our signals and trade setups, our premium indicator suite, pathways to profit strategy building course, community mentoring, and much more. Sign up today for the premium trading group at premium.crackingcryptocurrency.com. That's premium.crackingcryptocurrency.com. Like I said, we've got a lot to talk about. The Australian dollar, I mean, the absolute superstar of the Forex market this week and last week, continues to climb today, really highlighting that despite the bearish bias of even American fund managers, which we'll go over here in a little bit, that there is a strong hope overall for global growth. This is helping the commodity and export reliant Australian currency to continue to push higher here on Tuesday. Even with the uncertainty that's going on in the markets, we can see that investors are still taking on more risk, snatching up underpriced shares and currencies on the belief that the pandemic might be close to an end. Even with the IMF cutting its expectations for global GDP growth, which of course we knew that they were going to do, data from China today pointed to a bit of a better economic situation than might actually be. Meanwhile, it's been a fairly boring day in cryptocurrency, in my opinion. Bitcoin put in some bearish activity starting today. We were able to take a profitable short, but providing a lot of intraday opportunities, but a fairly tight range overall. We'll break that down and more in tonight's market analysis. The first thing that I want to talk about tonight is going to be right to today's cryptocurrency segment. We'll also do a check-in here with the trading competition that we're having on Bybit. But before we get into that, I want to break down the big news today is obviously this lawsuit being filed against the Maker DAO Foundation. So let's get right into that. Let's break that down with today's segment. If you guys are watching on YouTube or new to the channel, make sure to subscribe if you're there on YouTube. Bell icon will make sure you never miss an episode. Make sure to smash the thumbs up, guys. Lets us know that you appreciate the content. And I thank everybody that put some work into today's episode. Let's get going without further ado to the breakdown. Oh my God, Becky. Look at that wrong scene. All right, here we go. Now, another week, another class action lawsuit filed against a major crypto project. Just last week, we spoke about a New York-based legal firm bringing a swath of class action lawsuits against major projects, major players like EOS, Block One, and exchanges like Binance and BitMEX, for example. Well, this week, in a California district courtroom, a new class action lawsuit was filed, and this time it's against the giant of decentralized finance, the Maker Foundation. The lawsuit claims that the company behind the Maker DAO ecosystem misrepresented the risks of utilizing their platform to investors, which led to extraordinary losses on March 12th amidst the market meltdown that we had. Now, we've got the link to the article here. Now, filed in a Northern District Court of California earlier today, Tuesday, April 14th, the lawsuit names 3 entities affiliated with the Maker organization, the Maker Ecosystem Growth Holdings Incorporated, the Maker Ecosystem Growth Foundation, and the DAI Foundation, alleging that they are responsible for negligence and intentional misrepresentation to the investors, or as the suit describes the plaintiffs, collateralized debt position holders. Where have we heard that term before? Contained in the complaint is a description of the losses sustained by these so-called collateralized debt position holders, putting the sum of their losses at about $8.3 million in Ethereum collateral held on the Maker platform. As collateral was liquidated when the cryptocurrency markets melted down in mid-March, Black Thursday, as many have called it. The lawsuit claims that the risk of such a scenario playing out was never made clear to these investors, describing the people behind the Maker organization as misrepresenting the dangers investors could be faced when using their platform. It also argues, the complaint goes on to allege, that the Maker Foundation neglected its fiduciary duty to investors by fostering a platform and conditions on that platform that directly precipitated the Black Thursday disaster. It also alleges that the Maker Foundation was wrong to actively solicit millions of dollars to be tied up in their, as yet, still experimental system. Now, this formal complaint is on behalf of the, this formal complaint on behalf of the investors is asking for a minimum of $8.3 million in compensation. And it is a punitive lawsuit, meaning that they are asking for punitive damages. So it's $20 million in punitive damages that they're offering. So for those of you who are unfamiliar with the legalese of the court system or how the legal system works, punitive damages are there to essentially, they are awarded and they are asked for when there has been essentially horrendous wrongdoing. And they're not to really compensate the victim for anything that they actually lost. They are to punish, that's why they are punitive, they are to punish the defendant, whoever, if the defendant is found guilty. Now, it's generally pretty rare that punitive damages are offered. There's, thousands upon millions, probably millions of frivolous lawsuits that are filed in the United States every single year. And many of them are going to be asking for punitive damages. It's become kind of common to ask for punitive damages, but it's one of those things that almost never gets awarded. So punitive damages are generally awarded when there is significant case, when there is a significant amount of evidence that the defendants or whoever is, the defendants who are accused of the crime or the civil breach of contract, really deserve to be punished for their actions. They can't really be held criminally, liable, potentially. Every situation is different. Some, obviously the difference between this is in civil court, not criminal court. So they're not guilty of any criminal crime. But the idea of punitive damages is to punish an individual or punish an organization when their conduct has been pretty overwhelmingly destructive or negligent, right? Generally in the terms of fiduciary duty, which is what the allegation here is in this case. Now, the lead attorney pursuing this class action complaint, his name is Adam Hayter of the Harris Byrne Christensen law firm. And in an interview, he denied, obviously we covered last week, all this swath of lawsuits being filed against exchanges and big players in the crypto space. He denied in an interview that his firm had any relationship to the firm in New York, which just filed the spate of lawsuits that we discussed last week. You guys can check the Breaking Bitcoin Bits episode of that in our Breaking Bits playlist here on YouTube. Now, he was asked what he thinks will be Maker's fate if the judge happens to side with the plaintiffs in the matter, but he did decline to comment on the matter. Now, for me, now I can't let this go without, obviously, listen, in my opinion, we'll get to this in a second, I think the lawsuit is frivolous. Now, for me, this does highlight, not frivolous, but I don't think that it's justified. Now, for me, this does highlight an issue in cryptocurrency, right? And that is that trusted third parties are liability and lawsuit magnets. Obviously, the lawsuit filed against the exchanges in general are increasing in size. And these are the pinch point, exchanges are the pinch point of the fiat to crypto on-ramp. For many speculators, what drives the value of cryptocurrency is not its ability to facilitate payments or enhance freedom in the case of Bitcoin, but its ability to be converted readily into fiat currency, right? If that on-ramp wasn't so tangible or so critical to the purposes of many participants in the market nowadays, the value of cryptocurrency to hackers, lawyers, and governments would be significantly reduced. And this is yet another example of why it's very, very important for us to proceed with establishing these third parties with a lot of foresight, because situations like this can and have occurred and will continue to occur. They will continue to occur as long as these third parties remain the weak point for the crypto ecosystem. The other thing that is unfortunate about this is that meltdowns like, what happened with the Ethereum position, right, is very similar. It's almost no different from the situation that happened with the massive law of liquidations on BitMEX. But in that situation, the BitMEX liquidation engine failed to work properly, and the exchange failed to work properly. Whereas with the Maker DAO system, nothing really failed to work properly. There just wasn't any competition as far as picking up. So, one of the big things that these individuals that the plaintiffs are upset about is that a lot of their Ethereum, their collateral was purchased for 0 DAI because there was no competition amongst that market. Now, so what do you guys think? Does this lawsuit have any traction over a decentralized protocol like the Maker DAI system? A complaint by one of the plaintiffs, Peter Johnson, as I said, is that this exceeds the 13% max penalty that the Maker protocol promises. On the other hand, the auction system for liquidated collateral is written into the protocol just as well. And I can't help but mention that this does feel a lot like the DAO hack. Of course, it's not a hack, and these are different situations, but the argument over what to do with lost funds is exactly what split Ethereum into Ethereum and Ethereum Classic in the first place. And now we're back in the same situation. Overall, my opinion is that these are experimental protocols, and why I commend and admire individuals who not only develop but support the growth and development of these platforms, because I am all for these concepts, all for them. Investing at this stage lots and lots of money into unproven smart contracts and experimental protocols is very dangerous. You can support and develop and invest in a system without incurring a massive loss should you be completely wrong, especially with the volatility of cryptocurrency. The other thing that is unfortunate here is that as a strong Bitcoin advocate, situations like these have the capacity to kind of give Bitcoin a bad name, which is wrong because Bitcoin's been trudging along for 10 years now, doing the same thing without any of these problems. And I commend and respect Ethereum for doing what they're trying to do. I'm totally for the idea of decentralized finance, but it's really hard for me to feel sorry for people who lose a lot of money on something that they knew up front was experimental. Right? Now, there is a positive thing here, though, and that is that if anything ever were to happen with Ethereum or Link or EOS or Tron or USDT, expect an exodus into Bitcoin. Where are they going to go? They're going to go to Bitcoin, right? Same with USDT, where they're going to go into Bitcoin, right? So you're setting up, there is always this is what's kind of interesting about, and again, I guess a danger in the same way to those who short sell Bitcoin. There is always a danger of exponential movements to the upside coming in out of nowhere on Bitcoin, right? Of course, the exponential movement to the downside is always there. Appreciable assets can fall very quickly. But something to consider if you ever, when there is uncertainty in the market, you will often see Bitcoin perform and hold its value better than altcoins. This is how it's always been, right? Altcoins pump up faster and drop faster than Bitcoin. So there's always this kind of potential Bitcoin pump situation always underneath the surface, right? But as far as this situation, I'm really interested to know what you guys think. Is it a matter of buyer beware and investors should have been aware that in some extreme market conditions, their collateral tied up with Maker was at risk? I certainly think so. Please let me know your thoughts in the comment section down below here on YouTube. Let me know what you guys think. Please sound off. Now, our second story today is not this one. Here we go. Now, Bank of America released the results of their latest industry survey on fund managers, which reveals a pretty tepid outlook on the macroeconomy, according to those who filled out the survey. Now, in their April edition of the FMS survey, Bank of America polled about 180 industry insiders who collectively represent almost $550 billion in assets under management. And what the survey manages to do is capture the anxiety present on Wall Street today. 93% of the fund managers polled predict a recession within the next 12 months. Now, in terms of recovery sentiment, over 50% of the survey participants expect the markets to struggle through not a V-shaped recovery, but a U-shaped recovery, indicating that they feel the economic mood was going to remain sour over the next several quarters, while only 15% of the managers expected a sharper V-shaped rebound and recovery. Now, the SPY has seen a pretty good relief rally in recent weeks, gaining more than 26% since March, despite the ongoing pandemic. But uncertainty, of course, still looms in the equities markets and other risk on assets, giving the possibility of a prolonged shutdown and widespread unemployment. Clearly, the majority of these executives and fund managers feel that there is still more bad news to come. A survey also noted how mounting economic concerns are driving fund managers deeper into cash, so-called cash levels, which is the amount of cash that a fund will hold. And so, obviously, here's the thing. For those of you who might be a little confused, sitting in cash is not something that investors or traders want to do. Cash is not an appreciable asset. Cash is cash. It is one. It is one. It is one yesterday. It's going to be one today. In a year, it's going to be 0.97. You get my point, right? It is not, it's going to be a very stable, static number. It's not going to spike up dramatically, right? Unless you trade it against another currency, for example, right? Trading foreign currencies. So sitting in cash is something that investors absolutely do not want to do. Investors want to have their funds invested at all times. And when you give your money to a fund manager or a portfolio manager, or if your 401k, right? When you set up your 401k, everyone here has probably set up a 401k or some type of retirement account at your job or on your own. And your manager is going to ask you, your portfolio manager, your contact manager, or the automated web app that you use to fill out your situation, to fill out your portfolio, it's going to ask you like, well, what's your risk appetite, and what's your, how many years do you have left till retirement, and how much money do you want to hold in cash so that you can buy up dips? And realistically, almost all of the default cash level options are about 1% or less, right? Because it doesn't really make a whole lot of sense to be sitting in cash when you could be invested into the market. Unfortunately, fund managers and the entire ecosystem around portfolio management in the United States particularly is completely biased to the long side. And why wouldn't they be? The traditional markets have been in a bull market. I mean, really, if you just macro out, a bull market for the last 100 years, right? Every dip continues to go up. Yes, there are periods in time where the market goes down quite a bit, but as long as you wait, the market goes back up. And Bitcoin has been no different, right? There's never been a point in time in Bitcoin's entire history where if you would have just waited, you would have made money, right? There's nothing but unrealized losses until you sell. So fund managers almost never sit in cash. They're almost always long only, and that cash exists to buy dips. Obviously, the more these types of fund managers or hedge funds are going to be more complicated, where they will utilize tools like futures, options, short sells, things of that nature. Most typical fund managers, like your Fidelities for almost all of their retail clients, and your Vanguards, all of the stuff, it's just going to be completely biased to the long side. They're not going to act like, try calling up your portfolio manager at Fidelity for your 401k and telling them that you want to sell some stuff and that you want to short sell the S&P. And they'll likely tell you first they'll tell you that you shouldn't do that. And then they might not even be able to facilitate that trade for you, right? That's how brainwashed and long biased these individuals are in traditional markets, right? But cash levels, which is the amount of cash that funds are holding, has spiked to about 6%. And that is a figure that we have not seen since September 11th, 2001, right? Now, indeed, a flight to safety, or this exodus to safety or safe haven assets, was at the top of the minds of these fund managers they polled, with the most crowded trade. Most crowded trade means what is the trade with the least slippage, because there's so much liquidity, there's so much competition to enter into the market. The most crowded trade among the group was identified as long U.S. Treasuries for the second month in a row. Meaning, U.S. Treasuries are considered a safe haven asset because you are, when you go long U.S. Treasuries, you are essentially, betting that the United States government will cover its debt. You're betting on the United States government. It's been a solid return on yield for as long as the United States government's been around, which makes a lot of sense as we've been covering the 10-year Treasury note being pushed to record lows since this crisis really kicked off last month. So not only are they investing in something that's stable and secure, they're also buying the actual security for a fairly cheap price, indicating that even among professional fund managers, the fear, uncertainty, and doubt is still there, even as more aggressive fund managers are just, business as usual, buy the dip, buy the dip, buy the dip. So what do you guys think? Do these big money managers have the inside baseball, and are they wise to wait the market out for another possible dip from this looming recession, right? Or do you think this crisis is overblown and on the way out? The life is returning to normal soon enough, particularly with the talk that governors are kind of especially in the United States, the governors of certain states are kind of bucking the trend and actually talking about reopening the economy. Forget what the federal government says. And these last few weeks have mostly been a buying frenzy. So do you consider these last few weeks a buying opportunity? Or is the buying opportunity not even here yet, right? Let me know you guys' thoughts in the comment section down below. We'll cover this when we get into the market analysis a little bit more. Now, this is pretty interesting. A relatively new player in the crypto space has just surpassed some of the top dogs in our industry, such as Ethereum and Ripple in daily volume. And this at least according to Messari's Real 10 Crypto Volume Index. Now, Messari launched their Real 10 Volume Index earlier last year, and it was part of an effort to reveal legitimate volume stats across crypto markets by tracking exchange data from exchanges such as Binance, Bitfinex, Coinbase, Kraken, several others. And this is coming off of the Bitwise report that the over 90% of volume reported in the cryptocurrency space was wash and fake volume. Now, this new volume index happened to arrive, as I said, shortly after 2019's infamous Bitwise report, which showed 90 to 95% of volume on CoinMarketCaps are fake or misrepresented in some way. Now, that Bitwise report, interestingly enough, was, as you guys will recall, later submitted to the U.S. Securities and Exchange Commission for their review. And since then, we have seen an industry push to clean up the numbers. And then, of course, the recent wash of lawsuits against exchanges coming in last week. And this is where Messari's Real 10 volume charts really come in. And the company's founder highlighted today some pretty exciting volume stats that show Chainlink trade volumes have just surpassed Ethereum and XRP, the CoinMarketCap's number 2 and number 3 coins, which have very robust markets all in of themselves. All right. Crypto trading volume data showed that Link was second only to Bitcoin on Monday, with Messari reporting $130 million in Link trading volume compared to under $118 million for Ethereum and just $77 million for XRP. Bitcoin remained firmly in the lead with over $1 billion in trading volume being reported on Monday. Now, the bump in Link trade volumes managed to happen despite Link's status outside the CoinMarketCap top 10. With it currently ranked 11th. It still manages to post impressive volume data that puts it along the top coins. Chainlink, of course, for those of you who don't know, its protocol is designed to bring trusted external data feeds, i.e. oracles, into blockchain applications and getting necessary outboard detail on chain. Meaning, you want to write a smart contract that understands some sort of external input that's not on the chain. Chainlink is supposed to do that. It's supposed to be the data source that imports external data into the blockchain where the blockchain protocol can understand and act off of this external data. Chainlink's native token is, of course, the Link token, and it was created as a reward to operators who help power the network. Very similar to many, many tokens. Link, of course, was one of the top performing coins of 2019, having firmly cemented its status as top meme coin on the internet. Let's just take a moment. And just trying to find it. Hold on. Let's just take a moment and, really be sensitive to this, guys. I mean, rest in peace, Dogecoin. Having lost your title of top meme coin. And it's a really hard time for a lot of us, we know, like to pass the torch on to the newcomer. It's often difficult for us, but, we've had some good times, Doge, right? In the arms of the angel, fly away. Moving right along. Now, of course, Link surged from 29 cents to $1.80 over the course of the previous year, and it seems to be continuing its rally in 2020, having rebounded nicely off the March bottom. It's currently trading around $3.30 in that range. Now, Nicholas Contasti Writing in a new Medium post last week, took a look at the Link Network's on-chain fundamentals, concluding, in his opinion, that they remain very strong in 2020, and highlights the steady rise of addresses holding Link over the past 12 months. It is a good read. I suggest you guys check it out. Let me know your guys' thoughts down in the comment section down below. Right? We're going to get right into talking about this as a trader, right? But my question is, do we have any Link fans in the house? Do we have any Link fans in the hizzy? How long have you guys been holding Link? And what are you looking forward to on the project? Why do you guys hold the project? Why do you guys believe in the coin? Please, again, let me know your comments down below. Now, with that being said, let's go take a look over at Link, which is pretty interesting, in my opinion, right? Because we do sit at a fairly critical juncture now. Looking at the technicals here for me, we are coming off, this is the daily time frame. We're coming off of this really impulsive bullish wave to the upside. Obviously, we can see the objective signal. We broke the breaking Bitcoin initiator. This is the breaking Bitcoin trading system. We broke the breaking Bitcoin initiator right here. Giving us some upside momentum. Parallax, our confirmation indicator, flips bullish, letting us know that the trend is moving to the upside. And we do coast, kind of sideways a little bit. And here we come with Wadatar explosion, giving us this rising explosion level, letting us know that volume and volatility is now entering in the market, getting us really set up for this whole push wave to the upside. Now, several days ago, on the 13th, really 2 days ago, on the 13th, we had my modified Minx exit signal. Now, Minx is a momentum oscillator indicating that we were getting a sell signal, a confirmed sell signal. And on today's daily time frame, we've also gotten a breaking Bitcoin. Breaking Bitcoin has its own exit system as well, an objective signal. Now, this is an indicator that I have been utilizing in recent times, and this is the Voss predictive filter, right? This is from John Ehlers, and this is some of his latest work, and this is a pretty impressive indicator. This is a predictive filter, and it attempts to shift the crossover one bar to the left. So very impressed with this. Playing around with this. This was an implementation of Voss that my team has produced. There is a version of this on TradingView that you guys are more than happy with to go play around with. I've played with it. I don't like it. That's why we decided to write our own. It's much, much cleaner. And it is also giving us the cross under over here on the 12th, actually, catching the absolute very top of the market when it gave this cross under. Now, breaking down below the continuation filter here, which currently sits at $3.20, let's just call it, would potentially send Link plunging back down to about $2.26, assuming that we cannot rally above that. So, this is very interesting to note. Massive volume coming in, news articles being written about Link that are obviously quite bullish. And as much as I actually quite like Link, this is exactly the kind of sentiment analysis that I like to perform or watch for when I feel that a pretty significant market reversal might be in the making. So definitely watch Link to get some confirmation if you guys are looking to speculate to the opposite side. Otherwise, we'd be simply watching for some sort of continuation. Assuming that that is incorrect, then we are actually going to continue to push higher in a bullish scenario. But that is really not the picture that I'm getting from the chart. We'll definitely check in on this over the next few weeks. While we're here, let's take a look at the weekly chart. We don't really have, again, weekly charts fairly inconclusive. We'll take breaking Bitcoin off because we don't have a whole lot of data. Here on the weekly time frame, let's take a gander. Obviously, we had this nice consolidation range, getting this nice push to the upside, formed a double low, have rejected from that high. We are currently forming a lower high. Well, just from a pretty simple support and resistance analysis here, this seems to be a fairly important crux of the market here. This level right here, we could also identify kind of this zone right here, which gives us this nice zone of support, $2.91 to $2.50. If that level doesn't hold, then we could predict a movement back down to the lows here. Honestly, down to $1.80, $2, right? The daily time frame actually is just kind of letting us know that there is potentially a swing trade back down into that range that is possible, because that's where our bullish indication is. However, I will say this, that from a trending perspective, we do still exist. We are still in a bullish trend on Minx. What this, in my estimation, is attempting to predict is a pullback in that predictive trend. In that bullish trend, which is healthy and good, but would be a sellback of the gains that were made over here. So just be aware, just watch out. Something that I think is interesting and something that I've been watching for the last few days, actually. And when I start seeing news articles being written about cryptocurrencies and their volume, it generally tells me to be on the lookout. All right. With that being said, guys, thank you guys so much for your patience and for watching. That concludes the crypto currently and current events section. We're going to get right now into the breaking Bitcoin market analysis. We're going to take a brief break and we'll be back with you in just a few minutes. Don't go anywhere. This is the time to grab a beverage, grab some tea, grab some coffee, grab a smoke, and we'll be right back, break down the markets, and take your questions live here on Breaking Bitcoin. Stay tuned. All right, and we are back for you guys. This breaking Bitcoin market analysis. Sound off in the chat. Let me know how you guys are doing today. I see Bob the Builder. I see Robin from the Hood. Ricky T. B-Flow. I see you guys doing well over there. Crypto Jack, as always, in the chat. The Pie Guy. What else do we got in here? Crypto Caveman sounding in from the Canadias over there. Cryptos and tokens. Good to see you, my friend. Andrew Munns. You're up late. Yorick, we got Curtis C. David Rice. All right, good to see you guys. Meanwhile, the regular crew indeed. The few, the proud, the brave. The crypto faith. While we're over here on D-Live, let's put some lemons in this basket. Thank you so much for the 5 lemons there, Robin. Highly appreciated. All right, so starting off our analysis, of course, as we do on the daily time frame of Bitcoin. Let's get that. Oh, that's the VPVR. Let's get that. Let's get that sexy and delicious baseline on there. Pardon me. All right, guys. All right. Let me know if the stream lags out at all, guys. I'm really pushing the resources today up at like 90%. I'm pushing. Ooh, boy. Anyways, here on the daily time frame, where are we? We are in a daily no trade zone. There are no daily swing trades on the table for Bitcoin, in my opinion. Recently, we have crossed below the continuation filter. That occurred on the 10th of April. We consolidated sideways with some scam wicks to the upside and the downside. Obviously, we essentially took the pseudo reversal baseline bounce to the upside as a day trade on Monday, taking that trade to the upside here, closing out. Ended up taking a short earlier this morning, closed that out. Wasn't able to get a full 1% profit on that, but closed it out in profit. Killer Craig, good to see you, my friend. And we've actually just recently, on a day trading perspective, flipped long on Bitcoin. And we'll break that down here in just a little bit. But from the daily perspective, there's nothing to do here from a swing position. Looking for a long above 69.80 here. Otherwise, be looking at that 6,500 to 6,600 region for reversal baseline bounce re-entries. So setting limit orders there is certainly interesting. Robin watched the replay this morning, and it also lagged. Definitely break that down. Definitely look at that. I can certainly, definitely one thing that it is I've hooked up 2 new monitors to the stream box, so that could certainly be it. As much as I love this. This scene and using the DSLR camera for the stream, it is not really conducive to breaking down all the charts, as you guys can see. Well, you guys can't actually see it over here. I have 5 monitors over here, plus a TV up here, and then the 2 TVs back here. So I really am glued into a lot of things as I'm trading throughout the day. And that really is honestly what's best for me when I'm breaking the markets down. Plus, I can keep an eye on the chat and see what everybody's doing, keep my eye on the resource levels over here. I just have the one monitor over here, which is discreetly to the side of the camera. So I'm going to be setting back up the green screen, I do believe, and we'll be switching scenes. So we'll be doing this scene for the news, and we'll be moving over here and utilizing the green screen optimized webcam for the actual analysis. And we'll just be, it's like we've been, we do 30 minutes of news, then we kind of get a little looser, we break the markets down, we start trading. People start drinking. Not me. I'm, I don't drink, but as you guys are aware. All right, so daily perspective, as long as we are above 62.91, we are in a bullish trend on Bitcoin, right? Now, pullbacks to that area can and do occur, right? But really the area for pullbacks that I'd be watching if we were to get some selling here, it's going to be the 6,500 to 6,600 region. That's where the baseline is, and that's kind of our nice, tight accumulation zone. Area to be setting reversal baseline bounce limit entries. Otherwise, be watching for that momentum re-entry, that continuation signal above 69.80. Looking at daily indicators here, momentum oscillator, Minx, has actually crossed below the zero line, given the short signal. No confirmation to take that trade naked, but some people do take that trade naked, just utilizing Minx as its own indicator in its own system. We are below the static level, meaning that, again, Minx is telling us that we are in bearish territory, right? Minx as an oscillator is bearish, not in an oversold, not in an overbought region, just kind of hanging out right in the middle. So it is expecting pushing momentum to the downside. The direction that it is predicting is to the downside. Wadatar explosion still giving us positive volume delta, but dropping, receding explosion level. So as a confirmation indicator, this is still bullish, but we are below the dead zone, meaning that we don't have enough oomph. There's not enough volatility there. There's not enough momentum there to generate trades to the upside, nor do we have a rising explosion level, meaning that volatility is not increasing in the market. It is actually decreasing overall, utilizing the smoothing function of Wadatar explosion. So we need to get Bollinger Band separation to give us that impetus, that volatility volumetric push in the direction which we want to see for trading. And of course, Parallax as a confirmation indicator is also bearish. Now, Parallax, quite different from Minx. Parallax is not so much of a momentum oscillator. It is, but it is quite different. It's measuring very, very different metrics. It's measuring divergence between the relative strength index and the commodity channel index, is indicating bearish momentum and downside pressure as well. But again, hanging out closer to the zero line, and Wadatar is what's really, determining that for us. It's telling us that we, the only thing that's really lacking here for a downside push is some volume and volatility, right? Or what we'll often see in these situations is if we do end up pushing to the upside, it'll most likely be kind of on a Jericho situation, because as we can see, we've been in a very tightly compressed range, and Bitcoin's price does reflect the traditional markets here fairly well. Steep sell-off and then slow rally and climb to the upside. And now Bitcoin, kind of as an early indicator, is starting to fall off a little bit. So if Bitcoin does end up selling off from here, then I would actually expect that to be a leading indicator for the traditional markets as well, and expect to start seeing them sell off as well. Which, by the way, makes me very happy, because just today, my last ETF trade to the long side has now hit TP1, and now I have no risk whatsoever in the ETF markets, because all my stop losses are break even, and I've taken 50% of my profit across the board for traditional markets off the table. Really putting a big impact on my USD equity, my USD valuation, because I kind of went pretty long on traditional markets. First swing trade, and those are all in no loss situations now, meaning that the market can do whatever the heck it wants, right? And I'll just wait and watch for the next signal. Crypto and Token says, how goes it, everyone? It goes, my friend. Did we cover the leaked information and screenshots of China's CBDC central bank digital currency application? Even CZ tweeted and commented, well, oh my God, if CZ said it. No, we are aware of that, and we do have that lined up in the news queue. We just did not have the time to cover it today. All right, so there we are on Bitcoin on the daily time frame. Going down to the 4-hour time frame, we do have a bullish 4-hour meso trend. But what's really interesting here is, again, watching WADA explosion. Look how sluggish and weak this volume is. 4-hour WADA has really helped you pinpoint all the good moves with the dead zone filter wash. All these trades, all these market levels that are above the dead zone were tradable, right? Good volatility, good volume. That's why I think people who ignore volume are not as good as they could be, right? 4 areas of the market. Here's the sell right here. Here's the long right here. Here's the long right here. Here's the long right here. Here's the short right here. Basically, every area of the market that has been attractive to trade on the 4-hour time frame, and everything else was fairly unattractive to trade. So definitely watching WADA explosion very closely to generate those trade signals, and we don't have any of that upside momentum or downside momentum coming in right now. Overall, putting this in a no trade zone on the meso time frames. Minx is bullish here on the 4-hour time frames, and Parallax is bearish, but about to potentially trend flip to the upside. So I don't see any activity to take here on the 4-hour time frame. We need, again, now a Minx crossover to generate an objective trade signal, Parallax to turn bullish, and we also need WADA explosion to give us a nice green candle. So again, in a situation like this, where is the objective trading signal going to come from? It's going to come most likely on a big green candle that's going to come out of nowhere, right? So that's essentially going to be a breakout candle. Looking at intraday volatility, let's take a look and see what Bitcoin did today. Overall, this is where we left Bitcoin's price yesterday, consolidating at yesterday's point of control. And as I said, I didn't really see a huge downside pressure coming in. We did end up dropping post-show just a little bit. We ended up rallying, rejecting from yesterday now, Tuesday's point of control. Pushing down, forming a higher low, and then forming and consolidating above that. Here we can see this sweep, this market high. Obviously, any kind of these candles right here are certainly ones to watch out for. This is a shooting star formation. Typically, the way that this is confirmed is, if you see the candle close like this, there are some algorithmic metrics here. So any candle that forms a wick above resistance and then closes bearish below the close of the previous candle or the low of the previous candle generally leads to a sell-off. Similarly, you can see that same kind of activity in the form of a hammer candle. Let's see. This isn't a super good example, but that's a kind of an okay example. This is a decent example right here. On this candle right here, any candle that wicks below support and then ends up rallying and forming a higher candle. So again, just hammer candle and inverted hammer candle type candles, but this pattern is a shooting star pattern, right? It is a reversal pattern, and it did have some good follow through. This was the shortable trade of the day. Let's see here. So today being the 14th, when did I actually get to the markets? I ended up shorting around 69.05. Yeah, didn't get the absolute best entry. Yeah, ended up shorting around 69.05 today, and then ended up closing the trade out right around here. Ended up closing the trade out right around here today, and then moving long to the upside, right? Taking the long trade today to the upside, and now taking advantage of this price because I am long right now. Now. Let's talk about why. Let's talk about reasons for taking the long. Okay. Well, Minx on the 15-minute time frame has been fairly good at predicting good buying opportunities in extreme oversold territory, and the daily and 4-hour trend are bullish. So if we're looking to day trade utilizing the 3 screens method, which junior analyst Trunker has covered very well in his channel, and which Dr. Alexander Elder covers very well in his book, Come Into My Trading Room, which is available in the Premium Resources Library. These are all directional bias is very important. So when we're looking for this particular type of setup, we are looking to trade in the direction of the daily and the 4-hour trend, or the higher time frame trends, right? You need to pick some. I like the daily and the 4-hour. And then looking at the 15-minute chart, potentially for entries. And where do we want to get entries to trade to the long side on the lower time frames? Oversold conditions are really good if we're looking to go long. Overbought conditions are really good if we're looking to go short. And Minx, and this is my 15-minute Minx, this is a 30-minute look back period. Everything else is the same, is really quite good at catching these particular movements right here. In fact, we can even, with this setup, we can go down and plot reversals on Minx and get some very good trade entries. Here's the long, here's the long, here's the long right here. So essentially just taking that signal. Now I ended up predicting the long a little bit. I didn't wait for the 15-minute signal. I just saw that price was quite oversold. And then I saw this bullish divergence form is what I saw. I saw this little bit of bullish divergence. We actually formed a lower low and a higher low on the Minx oscillator. So again, that, and also the fact that as we were moving into the daily close, we were forming a higher low, and we saw a little bit of upside momentum and pressure. So that was the analysis taken in conjunction with senior analyst Alexander, because that was his prognosis as well. And because nothing came up on the daily scan today, we throw a wide net over the crypto markets, but nothing came up today. There's really nothing on my trading system anyways that was indicating any trade, long or short, with yeah, no exception. Wanted to double check. Yeah, nothing really came up in the daily scan of the markets today. So continuing to hold the B cash short, continuing to hold the BNB long. Those are all profitable trades and situations. Now, what do we see here in the current market today? Well, prices came down. Formed this point of control. And this is what's kind of important to me, right? Look at all this volume coming in right at the daily open right here. Now, this can shift quite dramatically because this is a fairly fresh candle. It's a fairly fresh day. But you can see here from the point of control, all the volume that was put in. And you can even see, look at the volume that's being formed right now. Even this kind of push through and breakthrough volume didn't generate as much accumulation volume as we saw earlier in the day. So this is overall fairly healthy, especially because we're putting in some pretty good strong candle movements here. Now, of course, these candles need to close fairly strong to kind of confirm this breakout above yesterday's point of control. But overall, I would like to see price move back up into the 7,000s, maybe even to the 7,200s, and tag these levels, assuming that we're continuing this upside. I don't have a whole lot of faith and confidence in that. That's why it's just a intraday trade. I don't have any swing positions open, but overall, this is the direction that I wish to be trading in on the daily. So the last few days been killing it as far as day trading goes. Which is good, right? So, and I'm happy that the members have been able to follow along with the group. And of course, that's what we do. It's what we specialize in. So, now the Renko trend on Bitcoin is attempting to flip back to the long side. We're not quite there yet. But what was interesting as a leading indicator was Ethereum's Renko chart breaking to the upside here and actually flipping to the long prior to Bitcoin. Now, Ethereum on the daily is in that same no trade situation. We need to get that nice clean close above 161.85. Other than that, we're really in the no trade zone for daily swing trades. Bringing up the daily baseline on Bringing up the daily baseline on Ethereum, we can see down here support sitting between 138 and 135. So that would be the reversal baseline bounce territory. That's quite a movement down to that area. It's about a 12 to 13% sell-off should we get to that reaccumulation zone, which was also previous support down over here. Fun fact, if you take a Hall moving average and put it on the Williams percent indicator as the leading line and change everything to 14, it becomes a stochastic but smooth. Lol. Good stuff, man. Let's see here. So we've got quite a bit of work to do if we're looking for entries on Ethereum. Now, obviously, the reversal baseline bounce entry, as I said, is going to take some work. But the movement back up to the upside, not going to take so much work here. We just need to push above 161.85. Looking at our momentum oscillators. Now, Minx actually hasn't flipped bearish yet. Hasn't crossed below the zero line, so we're just looking for that nice line cross to the upside here. Wadatar explosion giving us that kind of same weak sauce. I mean, honestly, not as weak sauce. Ethereum putting in more momentum than Bitcoin here and above the dead zone here on the daily. So again, I don't want to be too hard on Ethereum. Parallax has flipped bearish, so not confirming the long trade. So we do have some work to do. For the continuation signal to the upside, we need to get some upside momentum. So again, in a situation where we've really had nothing but compressed volatility for the last 4 or 5 days, what we really need here is a nice, strong candle close to the upside, right? And I don't want people to be too obsessed. Again, I cover this all the time. I don't want people to be too obsessed with predicting that entry and getting that and snagging that optimum entry. You just need to be patient and wait for the chart to tell you if the trend is continuing, and then you enter into the continuation of the trend. As a trend following trader, when the trend is proceeding, you are in the trade. You're all in. And when the trade pauses, or you get some technical objective information that the trend is paused or sidelined right now, well, then you step out and you do not re-enter until you get strong confirmation that the trend is going to continue. 4-hour Ethereum showing a little bit more strength than Bitcoin here. Again, but watching that 4-hour Wadatar explosion still below the dead zone. So nothing here on the meso trend time frames is really confirming that movement to the upside. Parallax is giving us a little bit of chop. Minx has recently crossed under. So again, work to do here on the 4-hour time frame as well. It is flat. Here on the 15-minute time frame, Ethereum putting in some nice work, some good pumpamentals on the 15-minute time frame. As for Ethereum, we are just coming up to yesterday's point of control, yesterday's distribution area. So overall, right now, this is just a retest of distribution. However, again, the important thing to note here is this same strong accumulation that occurred over here. So we'll just have to wait and see kind of patiently. If you're not already positioned, if you didn't already buy the lows, then this is not really the optimum time to enter, because we're just now coming up to resistance. And you do want to see Ethereum strongly close above this level of resistance with some conviction before you're looking for a stronger trade. And really, the 15-minute chart is not the chart to be looking for trending trades, in my humble opinion. But the Renko trend has flipped positive, so I know Mr. Ether is going to be long on his beloved Ethereum anyways. So let's get it. All right, looking at traditional markets, the ES mini futures are slipping as we move into the evening, as is the NASDAQ, as is the Dow, as is the Russell. The Russell actually taking quite a beating here on the hourly chart. A little bit delayed, obviously, but I digress. We've got the SVXY. This is the inverted VIX. So I am long on this. This is an inverse ETF tracking the VIX. This is essentially shorting the VIX. I am essentially short the VIX with a synthetic inverse ETF long. And that's been working out very well. Nice, beautiful gap to the upside today. Actually, gapping up higher than my take profit. So limit orders fill you at the limit price or better. So I actually got filled at the open today, which was a few ticks higher than my take profit, which was good. The euro dollar, not really doing much, distributing a little bit as we move into the evening hours, potentially slipping. And gold, actually, coming off of its strong rally, is slipping into the evening hours, as is silver. Looking at traditional markets, obviously the SPY, the Dow, the NASDAQ, extremely strong. NASDAQ gapping up very strongly today. The Dixie continues to slump. Again, gold putting in potential, and this is what me and Alex looked at and talked about today. Gold actually potentially going to be putting in a little bit of a pullback over the next few days, as is silver, which is good. I'm in a profitable trade on silver and already moved my stop loss up to break even. So silver has been a fantastic trade. So we'll pull back now to about the $15 level. Actually wouldn't surprise me in silver. I need to get a little bit more data before I actually exit my swing trade on silver. So we'll watch that. Brent crude, again, just something again that I really would like to long again. But because I do think that we hit 38 before we hit 18, but we are slipping and slumping. No really objective information to go off of at this point in time. No objective trade signal to the upside. Looking at our foreign currency markets, sorry, before we get to that, let's take a look at the overall Bitcoin weekly here. Look where we're at in the grand scheme of things. All right, so here we are, Bitcoin in the kind of fair market value range, still in between 6,000 and 7,000 is the fair market value range of Bitcoin, right at the long-term point of control. The point of control is the area where the most volume has been traded by price. It is priced by horizontal, not priced by vertical. So it's priced by, it's volume by price, not volume by time. Overall, we can see that we are, again, this is reaccumulation area. This is a reaccumulation, and this is a hurdle for Bitcoin to get over, because above this area, I expect us to accelerate to 8,000 fairly quickly. 8,000 to 8,200 represents a strong level of resistance. However, should we get up to 8,000, 8,200, we are going to reject from it, most likely initially consolidate and then push back through it. Getting over 8,200 will accelerate us to 10,000, 10,200, and getting above that, we get into dangerous kind of overbought territory on Bitcoin. But again, we generally get that acceleration factor. Just as we got it over here, we accelerated quite quickly, and we got it over here in 2017, we accelerated quite quickly. So definitely the area to be aware of. Obviously, the green box territory is our oversold area, accumulation area for Bitcoin, where it's been the smartest area to buy Bitcoin, going back almost 3 years now. A little bit longer than 3. Actually, no, not almost, but 3 years. So as long as we are in this yellow box territory, right at the point of control, I don't really see any strong arguments or cases for either up or down. We are consolidating. Overall, my bias, my long-term bias right now is to the upside. I am bullish on Bitcoin. All right, we already talked about Link. Looking at our foreign currency markets, I still have a wide swath of Forex exposure open. Here's all my open trades right now. So we'll just go through right now. The Australian Swissy, the Aussie Swissy, been long on this, rode this up the whole way. Might potentially be getting an exit signal on today's daily close. The Euro Kiwi was short on this. This has already hit take profit 1, potentially getting a reversal signal. We'll see how the daily closes here. Silver, I am long on, as I talked about, long on the SFXI, long on Upgold as well, long on the Dow, long on the SPY, long on the Aussie dollar. Seems like the Aussie is beginning to pull back, as is the Kiwi dollar and the Aussie CAD. Again, looks like I might be taking a lot of profit should some of these signals be generating today. Today's daily close looked good, but as we move into the evening, potentially looking like some of these trades are slipping. Now, all of these are at take profit 1, are better. Pound Aussie, have been short on this for quite a while. Pound dollar, been long on this for quite a while. The Kiwi Canadian looks like it is generating an exit signal as well. The dollar won looks like it is generating an exit signal. The Aussie yen looks like it is generating an exit signal. And the dollar yen, which is something I recently went short on today's daily close, is proceeding nicely in my favor as the Dixie continues to slip. However, looking at the broader Forex market, let's break this down. Looking at the broader Forex market, again, the Australian dollar has shown incredible strength, but as we can see, slipping as we move into the evening hour against the yen. Still strong against the Kiwi, but overall putting a doji potential reversal candle today, pulling back against the CAD and pulling back against the dollar, even though it did close stronger against the dollar earlier today. Now, we still have support as long as we're above 0.63516. Getting down below that level is going to be exiting us out of Australian dollar trades. Looking at the CAD continues to perform weakly against both the Swissy and the yen. I don't see objective signals here. They're still both in overall macro bullish. The CAD yen is in a macro bullish trend. The Swissy yen, I don't know why I'm looking at this. Both the CAD against the Swissy and the yen are in macro bullish trends, but in no trade zones currently right now. Swissy yen is on my watch list. I am interested to short this one. I actually wanted to short this one on today's daily close because we got this sell-off yesterday generating the continuation short signal, but the momentum was a little too high and we didn't have that rising explosion level from Wadatar explosion. And then when price pulled back about 30% of yesterday's sell down, I kind of wanted to take the short here because this presented a beautiful reversal baseline bounce opportunity, as we can see. I didn't though, because although this is a continuation signal, we are freshly crossing below the baseline, and I needed that volume confirmation and did not get it on yesterday's daily close or the prior daily close. So just not there for me yet. Looking at the euro as we are performing, looking like we're getting a little bit of positive activity out of the euro. The euro Aussie and the euro Canadian are still in bearish territory, so we're not going to be looking for longs for quite a while on these. The euro Swissy is in an area where we could be going long as we can get above 1.05. is potential an area where we can be going long for. Euro Kiwi again in a bearish macro trend, but crossing above the continuation filter today, letting us know that we can be exiting these short trades. And the Euro Pound. The Euro Pound as well, in bearish territory right here. The Euro Yen is also on my watch list. Same situation that we just talked about with the Swiss Yen. The Euro Dollar, looking for this to push above 109.923, and we could potentially be going long. Nothing to do today. The Pound Kiwi is potentially generating a continuation long signal today. The Pound Canadian is potentially generating a continuation long signal. The Pound Swissy is coming to an end, or the Pound Swissy is reaccumulating or distributing. We don't have objective signals right now on which way the pound is going. The Pound Yen and the Pound Dollar, both of which I have been long on, might potentially be looking to take profit on the Pound Yen as we are potentially getting an exit signal, and the Pound Dollar, we have not yet gotten an objective exit signal yet. The Pound Aussie, which I've been short on, is also potentially generating an exit signal, as is the Kiwi Dollar to the downside, and the Kiwi Canadian. Certainly, the Kiwi actually looks pretty weak against also the Swissy and the Yen. The Dollar Canadian, nothing to do here as it continues to slump to the downside. No continuation or re-entry yet. The Dollar Swissy is something that I'm potentially going to be going short on depending on daily close. And as I said, the Dollar Yen is something that I recently entered short today. Aussie Swissy seems to be turning around a little bit as well. The Dollar Won might potentially be turning around also. So definitely watching these charts closely. The Forex market has been insanely profitable for me lately and for our members. So definitely something that I'm watching well. Well, there you go, guys. We covered cryptocurrency, Forex, and ETFs. Bam, did it. You guys are not talking a lot in the chat, so I am going to go ahead and call it, my friends. Let's distribute these lemons over on DLive. And there we go. Coming in hot. DLive lemons coming in hot. Boom. Squeaky Tadpole, the Pie Guy, and Ricky T, big winners today. Thank you guys so much for your support. Thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis. I'm your host, Justin Wise. Hopefully you guys are having a fantastic evening and have enjoyed the show. Since I don't drink, we're kicking back enjoying. Highly appreciate it, my friend. Thank you guys again for joining me. I hope you guys have a fantastic evening. If you guys are watching on YouTube, make sure to smash the like button, subscribe if you haven't already. The notification bell will make sure that you never miss an episode. And if you're watching on Twitch or DLive, consider giving us a follow or subscription. It does help support the channel. If you guys have any questions, comments, concerns, or sarcastic remarks, even death threats about what we covered today, any of the charts that we covered, as well as the news that we covered earlier in the show on YouTube, please leave your comment in the section down below. Our team will do the best that we can to respond to you within the next 24 to 48 hours. Also, make sure to check us out on Instagram and Twitter. We post content there you will not see anywhere else. Thank you guys so much. And thank you to our partners, Spectre Security Coin and X42. Links in the description down below. Thank you to our sponsors. Links in the description down below. And of course, thank you to the team members who made today's episode possible. If you guys have any further questions, make sure to check out everything that we do in the Discord, discord.crackingcryptocurrency.com, and everything that we do for services we provide at premium.crackingcryptocurrency.com, including our premium indicator suites, including premium signals and trade setups, community mentoring, and one-on-one mentoring, among other things. You guys have a fantastic evening. Trade safely. We will be back here tomorrow at 9 p.m. Central Standard Time, so set your calendars, and until then, be excellent to one another.